Is economic crisis imminent? Recent volatility in financial markets has been the subject of much debate and speculation, with pundits on Wall Street divided on what lies ahead. On the one hand, there are those who believe that the current situation is just the tip of the iceberg and that the collapse of Silicon Valley Bank is a strong indicator that there will be more dramatic failures down the road. On the other hand, there are those who are downplaying the SVB's failure, saying that it was limited to financial problems in the startup sector of the high-tech industry. Despite the different opinions, one thing is clear. There are serious issues in the banking industry that could quickly spread to other areas of the economy. One of the main concerns is the role that the Federal Reserve's policy of raising interest rates may be playing in causing or exacerbating these problems. For years, the Fed has been pursuing a policy of gradually raising interest rates in an effort to prevent inflation and maintain financial stability. However, some critics argue that these rate hikes may be too aggressive and that they are causing a crisis in the banking industry by making it more difficult for banks to borrow money and lend it out to businesses and individuals. The collapse of Silicon Valley Bank is just one example of the problems that can arise when interest rates are raised too quickly. Silicon Valley Bank was heavily invested in the high-tech startup sector, which has been hit particularly hard by the recent market volatility. As a result, the bank was unable to meet its obligations and was forced to shut down. The failure has raised concerns that other banks may be similarly vulnerable and that the collapse of one bank could quickly spread to other parts of the financial system. If this were to happen, it could trigger a broader economic crisis that could be felt throughout the economy. And despite these concerns, however, there are also those who argue that Fed's policy of raising interest rates is necessary to prevent inflation and maintain financial stability. They argue that the recent market volatility is simply a natural part of the business cycle and that is not a sign of broader crisis. Ultimately, it is difficult to predict which of these views is correct. Despite all these factors, one thing is clear: the banking industry is facing serious challenges and policymakers will need to be vigilant in order to prevent those problems from spreading to other parts of the economy.